Then we have prepared the income and expenditure account for the year ended 30th April 2022. So let's prepare the income expenditure account for the club. So income, okay, what are the income? We have already written, so it should be easy. The subscriptions. So income from the subscriptions received, okay, subscription received, and then you have um, profit on the sale of the profit on the sale of the equipment, okay, of something disposed equipment. So there was a profit that is becoming an income. Then you have the sale of dance ticket, or we have calculated the profit from the dance ticket, so that becomes an income. Profit from dance. And then you have donations received, okay, it will act as an income. So donations received is an income. Then okay, these are the income we have. Now let's write all the expenses also. So expenses are going to be, the first one is rent payable. So rent payable, then you have the telephone charges, and then you have equipment repairs. Then we have the equipment depreciation. We have to calculate equipment depreciation expense, okay, this year's. And then uh, this has been included in the profit calculation, so we need not again include the scattering cost and hire of band. And then you have the sundry expenses. So now let's write the values. So the first one is, we saw that subscription received was 2950. Okay. So what has been the information about that? They said that it was still owing, the paid in advance was £200. So you subtract the £200, and the subscriptions were still due by 860. So you have to add 860. So this is the calculation for subscriptions, which was for this year, income received for the subscriptions this year. So that value will be 3610. So 3610. Then you have disposal, okay, on the of profit on sale. So that is equal to 150. So let's write that. So that was 150. And then you got the profit from the dance from the previous section, so that was 130. So let's include that, 130. And then you have donations received, which was 300. So donations received was 300. Now let's add up all the income. Okay, let's add up all the income. So the total income is going to be, so it is going to be equal to 3610 plus 150 plus 130 plus 300, that is 4190. So total income is 4190. Now let's calculate the expenses. Okay, the expenses were rent payable 1500. Was there any adjustment? There was none. So 1500 is the expense. Okay, 1500. And then we had telephone charges, which was 320. So let's write that telephone charges is 320. And then we had the equipment repairs, which was 600. Okay, was there anything included? Yes, there was something. Okay, it was said that 250 included the purchase of new equipment, so the expense, it should not include the purchase cost, so you remove it. 600 minus 250, so that is 350 is the 350 is the equipment repair cost. So the equipment repair cost actually incurred was just 350. 350. Then you have to calculate the equipment depreciation. So equipment depreciation, let's calculate that. We have the cost. Okay, we have the cost. 4,110 is the cost. Then there was a purchase of new equipment, so plus 250 minus the accumulated depreciation. If I do this much, I will get the carrying value of the asset. Okay, right, this much I'll get the carrying value, but this was revalued at 3310, so I will have to subtract it. So the carrying value minus the revalued amount, this is going to give me the depreciation cost for the equipment. Okay, so the depreciation cost calculation is like this. So you have the cost of the equipment minus its accumulated plus any purchases that has happened that this year, 250, minus its accumulated depreciation, it will give the carrying value. But this year's it was revalued at 3310. So the difference in the two carrying values will give the depreciation amount, and that value is around 350. Okay, so let's write that. Then we have the sundry expenses. So there was sundry expenses also had 420 owing and 130 was prepaid. So you add 420 and you remove any prepaid, so that value will be equal to 1740. So let's add that and calculate. So that value is 1740. Now let's add up the total expenses. So 1500 plus 320 plus 350 plus 350 plus 1740. So that value is 4260. So let's write the total expenses as 4260. 4260. And now let's calculate the profit. Okay, for profit or the deficit, for surplus or deficit for the club. So here we see that the income is less than the expenses, so this is a deficit for club. Okay, so the deficit for the club will be equal to 4260 minus 4190. That value will be equal to 70. Okay, if you name it as a deficit, you just write it as 70. Then evaluate the financial position of the Hillside Sports Club. The positive points we are seeing is there was a profit. Okay, it is good, and also it is able to have a small deficit, which is just 70 pounds, which is very small, and it is still receiving income from the subscriptions. There were some dance sale tickets and they could get donations, so it is still indicates that financial position is not so bad. And but the negative points we are seeing is, yes, there is a deficit of about 70 pounds. Okay, 70 pounds, which is not good. Okay, which is not good for the club, because it can not be able to pay any debts in the future. And also there is a 860 pounds of subscription which is due. Okay, there is a still due, and it has to be recovered. It could become irrecoverable debt, and it has not included any process to or credit control process to recover it. and also it should see that it should be uh, it is also having an overdraft. That means it also is a liability, is their current liability, which means there is a shortage of cash. All this indicates its financial position is bad. Okay, so in conclusion we can say that it is not so favorable financial position, not so favorable financial position, and the club has to recover, okay, its subscription dues, and it could offer more activities, for example like competition, in order to increase the income and reduce its